I'd like to thank everybody for joining and watching this episode of Solar Slopes. And it's a little bit special because we just are fresh back from RE Plus, the largest trade show in America for solar and storage. And man, boy, we have a lot of things to talk about today. I'm here. I'm Dean Caravallati, the host of Solar Slopes. I'm also the Chief Revenue Officer over at Solar Insure, where we have a suite of SI 30 protection products for warranty on solar and batteries. And joined here today by Sanjay Bhatia. Can you let us know a little bit about yourself?
You're definitely excited to be here. Sanjay Bhatia here, and I work as head of product with QuantiEdge, where I work with various solar installers and battery OEMs to enable them to get into virtual power plant market, home energy management, and complete software hardware stack consulting. Excited to be here and talk to you, Dean.
Yeah, I'm excited too. And it's always nice to be able to, after the show, it's like we've had dozens of meetings, gone to see so many different booths out there, had so many conversations, not only at the booth, but at different booths, but in the hallways and just in the aisles. And man, it just seemed like it was an overwhelmingly positive show. How about for you?
Yeah, definitely. A lot of energy there. And yeah, it was very big conference. And I did not get the chance to meet all the people I wanted to meet because it was so big. But yeah, energy was very strong there and strong product, strong pitches. And yeah, it seemed like a big event.
Yeah. So one thing that was clear to me was that the industry isn't slowing down. It's just shedding old habits, and we're going to talk about some of those things. And you know, gone is the illusion of tax credits. As time goes on, we're not going to be needing those. That the value of lifetime savings and energy resilience is alive and well, and going into 2026, and we're entering into kind of a service first, long term value business models for residential contractors, more like energy service providers, and really that's kind of like kind of the resounding theme that I'm seeing, and looking forward to that because you know what, we're seeing rising energy costs, weather events, grid instability, brownouts, rolling blackouts, and all of this leads to resilience, battery storage, and arbitrage for backup. And really, I would have to say that batteries took center stage. Battery storage took center stage at RE Plus 2025. Where would you think?
Yeah, definitely it was all about storage. And that's what I saw. The narrative is completely changing from just solar in last few years to solar and storage. And now it's all about storage plus solar. And also, like, I'm seeing a lot about home energy management, so it's not only about solar is one component of complete home energy management, but all the different systems integrated together to provide the energy independence and a smart energy to home. That's what I'm seeing. Yeah, so we're spot on.
Yeah. Awesome. Love it. So, hey, let's kick this off, Sanjay. I know you work with contractors as well as we do here at Solar Insure, but with this crunch of trying to get all these jobs installed into 2025, um, what are you seeing of permitting times and PTO times? Is it getting better?
Yeah, from my observation and what I have spoken to with various installers, the time to get the permit and permission to operate is not speeding up. Okay. In fact, we are seeing a lot of stress on the installer side because everybody is trying to capture the tax credit, which are going to expire at the end of the day for homeowners who go loan or cash. And in that scenario, they also have to think about the next year, like how do they move from a cash and loan model to PTO model. And uh, I mean, even the utilities are taking a lot of time on interconnection. There was a promise from Solar app, but utilities are still taking their own sweet time. So there is a lot of stress on the installers, and there is a lot of uncertainty. What if the installation is not complete and the permitting is not done by the end of this year? Would they be still able to take the credit or not? So yeah, a lot of stress.
Yeah, absolutely. And that's kind of like having to juggle that right, of a full pipeline, a lot of contractor providers today are full up for the year. They're not taking any new installations. They're prioritizing cash and finance installations and processing those first and foremost at this time. So, this is something that they're, like, heads down looking at, but they're also, you know, have homeowners coming to them and saying, "I still wanna have solar installed." So, we're gonna talk a little bit about, like, what is the message for 2026? Um, what is the, TPO versus ownership? What's happening with the grid stability and data centers, AI, VPP power plants, right? And the, DERMS, right? All of these things are playing into an insatiating appetite for energy. And this is putting our grid on a strain. I attended a meeting recently here in Utah, on energy and with the Department of Energy, and they're saying that we are in a energy shortage here in Utah. This is curbing development. This is curbing infrastructure and curbing building of new homes, businesses, and manufacturing. So this is a hot topic, and storage and solar have a lot to do with it. All right, so let's
Yeah.
go ahead and I'd like to say, what do you think is the biggest wake up call for those who attended for you at RE Plus 2025?
Yeah, the biggest wake up call for me was how the industry has to shift, and they have to shift fast. Okay, all the financial models have to change. They have to confront the new reality, and that's what I'm seeing. The earlier it was all about product and tax credit, and now the pitch has been changing to more energy independence, the storage, and they also have to and if all of this was not sufficient, they also have to meet various compliance and federal or tax laws, and so they have to keep track of this. So industry is shifting, and but there is lot of activity is still there, and I mean this year and probably next year. I mean I'm seeing a lot of good things happening, but at the same time, yeah, companies should become an expert in multiple different areas such as smarter financing, supply chain auditing to meet the domestic content requirements, as well as security and compliance for batteries and all the distributed assets.
Yeah,
Uh,
absolutely. Now, if you had to summarize, where we're at as an industry, not what the trade magazines are saying, where would you say we are?
Yeah, definitely. I consider I'm when I look at the industry right now, I feel that this industry is like a uh, teenage boy or or college graduate just moving out into the real life. Until now, they have been supported by parents, and parental support is great. And parental support is kind of like a tax credit. And now they are on their own. So I mean, some companies will evolve, some will thrive, and others will not. So it's all about utilizing the right technology, trust with customers. And I know, Dean, you are very big on how to move this industry from just dependent on tax credit to be more customer friendly and value for the customer. So yeah, I mean there is growing pain. Definitely, I'm seeing that. At the same time, yeah, I mean I'm working with few companies and they are on road to thrive. Yeah,
Yeah,
definitely.
absolutely. No, I love that illustration. It's just about less than 6 months to move out. It think we on our own, right?
Definitely.
And we know that this was like, for something to change this fast, is really for an industry to pivot that's in the stage that the industry's in. The time frame has been very difficult.
Definitely.
And there's gonna be some challenges, right?
Yes.
So let's talk about TPO versus ownership and the risks of going all in with, let's say TPO, right? And that means third party ownership leases, PPAs, right? So 2025 is the year that many contractors, like end of 24, 2025, and the interest rates went up, that a lot of contractors defaulted to third party ownership. And unfortunately, we saw we saw SunPower. They defaulted and
Right.
claimed bankruptcy, right? And then we saw another very large company claim bankruptcy, and they left about $327 million unpaid to contractors, and over 22,000 homeowners left in the lurch with partially finished or finished systems that weren't fully to PTO. And this just kind of like puts our industry in a bad light. And then we had a recent other TPO provider that went out of business. Their business was based on some of the government programs that were clawed back, right? So can what if I was a contractor, I'd ask myself, can I with my cash flow be able to, like, if I had 80% of my business into that sort of a model, or if I was not being paid for several months, or throttled on payments, or slow paid, or just not paid at all, can my business survive 2026 and this change? Okay, right. Yeah, so that's a good question to ask, and should I diversify my offerings? Should I make sure that I still lead with value, trust, lifetime savings, warranty protection, and be able to own the customer relationship, and be able to get referrals from that, and also as time goes on, add on systems, be able to make sure that I can see the lifetime value of a homeowner relationship, and be that service first business model in that strong regional player that all the community turns to for solar batteries and whatever else I'm installing.
Definitely.
Does that make sense?
Yeah, great perspective, and you already covered a lot of points on which I wanted to ask you questions and get to learn more. But still, at the same time, like, how do you see the future of TPO evolving after the ITC phase out? Is it going to be like more TPOs? Like, tell me more from your perspective.
Yeah, absolutely. So, what contractors that I spoke to at RE Plus, half of them had a plan, half of them didn't have a plan. Um, the half that didn't have a plan, they're like, "Hey, I'm just going to get through this year, and I'm going to figure it out in 2026," which is probably not the best plan. Um, but the other half said, "Hey, I'm going to lead with value, right? I'm going to continue to try to foster those relationships." Um, I spoke at James Showalter. He spoke at RSA event, and they lowered the cost of their batteries by 30% and their inverters by 25%. So really, it doesn't affect that product. And other manufacturers are doing creative things to be able to make sure that they're more price sensitive. So
Definitely.
what's happening is in the financing space, there's zero dealer fee loans and the dealer fees used to be 30%. So that makes up for the tax credit. And they're doing 30-year HELOCs. They're doing 30-year loans with no dealer fee. They're doing creative financing, like an escalating um, loan, right? Or they're even doing a loan that for the first 36 months, the the uh the payment is lower, and then it reamortizes that time. But all of those last two things are kind of a crutch to get away from the tax credit. Really, what we really need to do is kind of draw the line and say, I need to learn how to sell battery storage and solar based on the value of resiliency, being able to make sure that the homeowner has power when the grid goes out, and
Definitely.
it's actually um, stated that there's going to be much higher rates of power outages in the next 5 years than ever in history before, because of the things that we talked about in the beginning. So really, it's going to be really making that service first business model come to life, and so it's changing.
Yeah, it's changing. Yeah, great points. And you also talked about EG4 Electronics and James Showalter. Yeah, yeah, great guy there. Yeah, I've spoken to him, and yeah, they recently announced partnership with Tigo Energy. It was all over the news, and how they are utilizing Tigo's optimizer to help homeowner produce more electricity with the same components. So yeah, I mean, good innovation happening. And that leads us to the next topic about the battery boom, grid chaos, and energy thirsty data centers. So yeah, can you talk to me more about that?
Absolutely. I would just definitely say like battery storage was the main event at the event at RE Plus,
Definitely.
and data centers are pushing insane load growth, and really they they can't even have power out for a millisecond or a microsecond, because that actually shuts machines down. They can shut the whole machines down. It takes hours to repower everything up, and the grid instability is no joke. When there are wind events, there's shutting down the grid. That's happening in Hawaii, California, here in Utah, and other states. So those are just rolling blackouts that are scheduled, and then obviously when that the infrastructure is over 100 years old, right? And so really, can it handle all the power that's going through it? And so really we're seeing that the fastest way to deploy power is battery and solar.
Yes.
It's like within a year, you can have a full power plant.
Definitely. Yeah, yeah. Versus 4 to 5 years to set up the natural gas plants and other way of generating energy. So yeah, you mentioned about data centers. As we know that AI requires a lot of energy to process the data on the large language models, and also e- e- Meta is setting up a very big data center here right here in Utah. How are you seeing data centers change how we think about the battery deployment,
Yeah.
and why?
Yeah. I'll just say right now, like I've got these glasses in my pocket. Okay.
Yeah.
These are
Yes.
the Google Meta glasses. I'm taking a video right now with them. It's going to my phone, right? So, having these glasses and having this, it can translate. They can translate for me. They can take pictures, take videos, and really, it's interesting, that even we have to charge our glasses now, right? And our glasses are using data. It used to be funny that our watches did, but now our glasses do. So really, I think that the insatiable thirst for these data centers is just that it's just going to continue to grow. We never thought that the internet or apps could actually be more part of our lives, but they are becoming just front and center and literally on your face. So it's really interesting to see how this is happening, and it's I do think that as far as time goes on,
Yeah.
that yeah, batteries just aren't a backup. They're the new power plant.
Yeah.
Every contractor should think like a microgrid integrator and know about with data centers going to be paying over $1 a kilowatt hour. They're willing to pay that for energy right now. So what incentive do the utilities have to lower prices for energy rates for homeowners and consumers? So we're seeing the rise of electricity rates at exponential rates that have never been seen before, double digits, and we're going to continue to see this.
Yeah, definitely. And talking about these glasses, I mean, they help you be more productive, but at the same time, you look cool in those glasses. So
Thank you.
yeah, double advantage of that. Yeah. Okay.
Yeah. So do you think I'm sounding a warning here, Sanjay? Do you think that I'm like saying the sky's falling and it's not really, or do you think that we're really in for some great instability here?
Yeah, definitely with the rise in energy demand, and I mean, I'm seeing that the grid will have a lot of challenges, and I mean, you are spot on that. I mean, big tech companies are willing to pay the market rate and even higher than the market rate to get the electricity to power all these energy thirsty data centers. Yeah, something needs to get done for the end consumer, and that's where the storage and and solar comes into picture. Yeah.
Yeah,
So yeah.
absolutely. So, hey, that kind of brings us to the other thing. I just wanted to just talk about a little bit more about, hey, if the energy rates go up,
Hmm.
do you believe that if the tax credit's not there, that homeowners are going to say, oh, well, there's no tax credit. I'm not going to go solar or battery. I'm not going to get either one.
No, it's all about energy independence, and I think we have talked about before. I mean, I was here in the last session that you had that Americans love independence. Okay, I mean, if you see here uh, the network of cars, the network of roads. I mean, everybody loves independence rather than relying on the public transport. Saying it would be in the energy sector. I mean, you must have the energy resilience, energy independence, and that's where, uh, uh, yeah, the battery boom is going to happen, and customers understand that, and yeah, so definitely, I would like agree that
Yeah,
that's the future. Yeah.
absolutely. All right, awesome. So now let's talk a little bit more about smart tech, AI, DERMS, and the rise of VPPs, because this is something that solar contractors in the residential field, also obviously commercial, but in the residential sector, this is affecting them. And AI is finally being used where it matters in grid um, orchestration, service optimization, and interconnection modeling. Also, virtual power plants are moving from pilot to mainstream. We're seeing it in several states.
Definitely.
DERMS and SCADA are making behind the meter changes visible and valuable. So, showing that this is an important aspect for the economy at the same time, and for for other companies to be able to manage these and to deploy energy when the utilities need them most to be able to curtail these blackouts and these brownouts and the grid instability. So let me ask you, where do you see the most real tractions for VPPs right now?
Yeah, so first let's talk about VPP before we get into the traction. What are virtual power plants, right? It's coming together of all these distributed energy resources, not only the batteries but uh, ch- EV batteries and thermostats all coming together to support the grid or release the energy back to the grid to support the grid. Okay. Now, one of the challenges with what setting up and getting the VPP operational has been how do you orchestrate all the different distributed energy resources? Because to to bring them all together, you have to read the data from all these OEMs like batteries and EVs. That has been one of the challenges. Not only that, right now most of the VPPs are cost centers. Okay, and it's because there is no scale available. So where I'm seeing the traction right now is with big installers and big aggregators who has the economy of scale. They are able to orchestrate, let's say, 5,000 to 10,000 different batteries and bring them all together to release the energy back to the grid. So that's where the efficiency of scale is coming, and then also AI. AI is helping out with within the DUMS software. So many of the aggregators, they will be able to generate the revenue by participating in multiple VPP programs. So they have to stack all the participation to be able to give customers the benefit of the best program based on the time of usage and what the utilities are paying. And that's where AI is coming into uh, implementation to find the best path for releasing the energy back to the grid. So that's what I'm seeing. I mean, California is leading. There are multiple different programs in California, DSGOs, and there are a lot of community choice aggregators which are helping these aggregators get into the demand side market. So yeah,
Yeah, absolutely.
California is leading the way.
Yeah, and I would say too, when I was walking around the show, I stopped by Sig Energy. They were rebranded from Point Guard Energy, right? Sig Energy has the first EV to home charging, right?
Yeah.
And then they have the meter collar as well. So they're well ahead of the market on that solution. to be able to help with all that controls, those controls like you were talking about, when it comes to VPPs and also convenience, right? And resiliency and stability when there is a power shortage.
Definitely. Yeah.
Yeah. So, are you good on all the VPP? So, as far as where do you see the traction happening?
Yeah, definitely. And one of the other things which I want to point out is there are a lot of batteries out in the field which cannot be integrated right into the grid because they do not have the vertically integrated SCADA system, which is needed for getting the state of the battery, the charge of the battery, and be able to communicate back with the battery from the with the signal from the utilities. And that's where uh, there are new solutions which I saw in the market, and I'm helping battery OEMs get into the new VPP market with their old legacy batteries by retrofitting these batteries with the Edge dumb software. They are now able to participate in the VPP. So yeah, a lot of good innovation is happening, and VPPs will soon become mainstream because installers need to find the new revenue stream. If 30% credit is gone, what are the other ways to monetize all these assets which are on the field? Definitely VPP participation in the DER program is going to be big.
Yeah, absolutely. I love that talk track. Let's dive deeper into that. So, what you're saying is without any other equipment, it's just a firmware update that can be done. Deployed assets can become part of a virtual power plant with this firmware update and software. And this is another revenue model for solar contractors. Can you explain that a little bit more?
Yeah, definitely. So there are batteries which are right now not capable of communicating to the grid or integrating with the grid DOM software. So the firmware update is definitely required, but at the same time, there are edge gateways which are a separate device. They look like this 2 by 2 inch device.
It's CTs, like CTs.
Right, right, yes, and they have the software installed to convert like most of these batteries have Modbus specification to communicate the data out, and these edge gateways have the protocol support needed to convert Modbus into the signals which are actually accepted by the grid software. And that's where the retrofitting these batteries with a small gateway to enable these batteries to participate in the virtual power plant, because new vertically integrated batteries, that's another route where you can go buy the new batteries, but I think the growth will come from the existing deployed
Yeah.
assets on the ground.
Yeah, absolutely. I definitely can see this as a nice way for that to happen. And did you see a lot of this at the show? Like some examples, maybe some manufacturers?
Yeah, definitely. I mean, I've seen the uh, many of the companies there which I met were mostly software companies, and they have their own partnership to bring in the device. For example, I talked about EG4 Electronics. They had this tie-up with Tigo Energy, and Tigo has got their Cloud Connect uh, advanced uh, device which coordinates the module level energy tracking from all the optimizers on different modules. And these devices, Cloud Connect Advanced, is also able to host the Edge DERMS software, which will actually enable the batteries to communicate the data from batteries to grid and grid signal to the batteries. And there are multiple different software companies. I mean, I'm aware of. I'm working that like few of them. I mean, Flip Energy comes to my mind, and Molecule Systems is one of those bigs. And by the way, I do not get paid by them. I just make sure that the installers get the right software to get them enabled into this virtual power plant market. So a lot of players
Yep.
and a lot of good activity happening in this space, and yeah, the future is bright there.
Yeah, absolutely. And I know even the residential installers should think about participating in these VPPs is because it is another source of revenue, another way for homeowners. There's programs like Bring Your Own Device, right? Where the homeowner can choose from multiple batteries, right? Or it could be sort of a program where the utility owns the battery, right?
Right.
And for a certain amount of time,
Definitely.
and then where it's fully subsidized or partially subsidized, and then really the other thing is finding some pockets in the country where maybe there's like I know in Texas there's areas where you could actually do a night plan and just charge your batteries at night for 2 or 3 cents a kilowatt hour. And discharge that power during the day when you're using your air conditioning, doing your laundry,
Interesting.
using your pool pump,
Yeah.
right? And, you don't even have to have solar on something like that. So, there are ways that, contractors are looking to be able to find ways to bring value to the end consumer, and the utilities call them ratepayers, which isn't a nice word, I don't think, um, right? But
Yeah.
but really, as far as, the homeowners, right? The end homeowners have choices in certain areas on what they can do, and put an education first to the homeowner, but really, who's gotta be educated about it the most? It's the contractor and who's representing the contractor, the solar professional in the home. And so, that takes me to, like, where if, you're thinking like, "Hey, next year I'm gonna need to expand to keep my be able to keep how my volume or to stay in business," think twice. Maybe it's better to double down in your market where you know the AHJs, you know the utilities, you know, the counties, right? And all of the different idiosyncrasies of the inspectors, and you can be that much better than your competitor that may not be around or may get merged with, or acquired next year, and then it's no longer a local regional company, and you are, right? And so, usually the local regional companies where a homeowner can actually walk in to your office and talk to you, is the one that's gonna win.
Definitely. Yeah. So, uh, when I was working for Sunrun, I mean, they have a very big TPO offering, and they have relationship with the customers for next 25 years, right? I mean, so it's not only about like, okay, I'm done installing the solar, but how do you help them over the next 25 years to provide them the new way of managing their home energy? And that's what I was working on there, as a complete home energy management department, on like what are the new devices we can bring in at the customer's home, how can we help them use their energy more efficiently. So this is more about like 25 years to 30-year relationship with the homeowners. And also, like, one of the things the industry needs to do is to build partnership with the local governments. With the federal tax credit gone, I think they have to lobby at the local level to make sure that the solar industry thrives. Yeah.
Yeah, so totally on that with a long-term relationship with the homeowner because not only can you get a referral from them when you give them the great service that you provide, but at the same time, you can look at other things that can help electrify their home. And many are going with EV chargers, batteries. There's also re-roofing. It's totally related,
Yeah.
among other things. And so the lifetime value of a homeowner relationship isn't just a one-time transaction, and this is where I see the industry shifting today, and I'm excited for that, and to see that really we're seeing contractor providers looking more at the holistically at the homeowner, and the home, and being able to help them in many different ways.
Yeah.
So now let's talk a little bit back to on the commercial side for domestic content, compliance, and the future of finance. So there's a lot of talk out there about prevailing wage, apprenticeship rules that are attributed to TPOs and commercial.
Right.
There's a 10% domestic content bonus that's causing manufacturers to kind of dual track compliance and non-compliance product lines. So they might have a FIAC compliant line and a non-FIAC, yeah, right, compliant line. And there's also a confusion over foreign entities of concern, FIAC. It's driving some contractors toward ownership models by default because let's face it, um, there are no rules when somebody wants to just own their solar and storage facility, their own little microgrid. So they could buy from whoever they want.
Right.
Now, my question to you, what's your take on the compliance load for developers in 2026, solar developers in 2026 and beyond?
Yeah, definitely. I mean, the compliance requirement is increasing substantially. I mean, there are new interconnection rules, so and domestic content requirement, like you mentioned, and different tax credit based on the domestic content versus like FEOC. So they have to maintain all of this compliance requirement, and also when these commercial uh, grid projects are looking into participating into grid resilience program, they have to also apply for interconnection for virtual power plants. So that's like that requires another level of compliance with the telemetry requirements. All these batteries, like commercial grade batteries, should have the telemetry requirement under 5 minutes. What that means is that they should be able to get the data every 5 minutes out of these batteries. And then also performance requirements. There are performance requirement guarantees which these developers have to maintain. So there are like lot of paperwork for interoperability between different systems, battery versus grid connection, and also like proof of performance. So yeah, definitely it's increasing. Compliance load is increasing.
Yeah. So, so now, we're talking about the new appliance in the home battery, right? And it seems like we keep on coming back to that. So how should contractors vet hardware versus finance partners in the environment that we're in? What would you say?
Yeah, so contractors should be sticking to the partners which have the strong certifications. So we are talking about UL certification, IEEE standards. Okay, so that uh, they uh, they meet the requirements from the utilities, from the grid providers. So that is one thing, and also like warranty. Warranty is very big. I mean, uh, the the battery should go on for a very long time. And I know, Dean, you have a uh, like complete offering of the for the warranties of the batteries. Yeah, these contractors should be looking for that. And then another thing is like how should they think about partnership with the finance providers so that they can participate in the TPO with the tax equity market. I mean, that's completely changing. It's a very new area, and there are a lot of details still to be learned and to be figured out. But combination of tax equity partnerships and better warranties, better product, I think that's what they should be looking for. Yeah,
Yeah.
yeah, I would love to know your take on.
Sure. Yeah, absolutely. Well, I would definitely say like on hardware, look at the Solar Insure approved vendor list. There's manufacturers on there that have been vetted by Solar Insure and underwritten by Zurich North America. Um, Zurich North America has been in business over 150 years. So, with the warranty on Solar Insure, they step in if the manufacturer defaults or goes out of business. And really, that's something that really brings peace of mind not only to the contractors, homeowners, but also the financiers. They really want to be able to have that protection because their capital off takers want some sort of semblance of normalcy because we see the instability in the capital markets and quite frankly they've um they've they froze their money this year, right? In once this announcement came out on the big beautiful bill.
Yep.
and we saw one of the longest standing um, solar lenders, right, go out of business. And it was overnight that it happened, right? And then we saw some other lenders pull away from solar and get more into home improvement instead of solar and batteries. So, and then we saw a lot of TPOs then freeze or throttle the payments to their contractor providers, and it's still happening today. So, I would say, like, when you're looking for a finance for manufacturers, look at the Solar Insure AVL and protect them with Solar Insure warranty products with a battery replacement included. And when you're looking at finance companies, look at their track record. Also, look at what they're offering. Is it the best thing for the homeowner? And look at like the total payments compared to of a TPO to the total payments of what someone would pay on ownership. And be able to share that with the homeowner and give them the choice, not the choice for the salesperson to hit the easy button and say, "This is gonna be so easy, I'm gonna switch them over to 5 cents less than they're paying today on a PPA." Because really that's not always the best thing for a homeowner, especially now that there is no tax credit, right?
Right.
So everyone qualifies to own solar. Right, to
Right.
have the ownership model. So and diversify your lenders,
Right.
right?
Okay.
Use lenders that don't have dealer fees, credit unions, there's companies that are bringing out HELOCs, right? There's things that are happening. Look for the ones that are doing creative and what's best for the consumer, because this is the best thing for the long-term value of your business and your reputation as a company. And for you to own the relationship with the homeowner, you're not dependent on a third party's reputation on
Right.
PTO and tranches and payments. And there's also a lot of operational things that happen when you're dealing with a third party company. When it's your own installation, you have less operational headaches,
Right.
and it costs you less to install a cash or finance product.
Right. Yeah. 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 Definitely. And talking about reducing the cost, I mean, there. Well, just an off topic. I mean, I'm working with few installers. They have a lot of interest in building custom AI agents to take care of like various compliance checks and all the paperwork that they are handling. So yeah, I mean, everybody needs to cut the cost so that they can pass on the savings to customer and and help them be more energy independent. Yeah, yeah.
Absolutely. So definitely some insights here. We definitely know that compliance isn't optional anymore. Financial partners who can't navigate this will sink. They will not be able to be around. So
Yeah.
um, we want to make sure that we're building a good industry here. So
Right.
let's talk about this. The final challenge. 2026 isn't a guessing game.
Yeah.
It's, Sanjay, what do you think your biggest takeaway from RE Plus was and our conversation here today?
Yeah, my biggest takeaway would be like I already mentioned at the beginning how the narrative has changed from solar all the way from solar to solar storage, storage plus solar to complete home energy management. How the installers a- and solar companies can help customers achieve the energy independence that they are looking for, and also like suggest them the best way to utilize the energy. I mean, there are a lot of smart panels with the help of AI based on the time of usage and where the customer can maximize the usage of energy and improve the lifetime value. I mean, that's where the narrative needs to change. In my perspective, that's what I saw all over the all over the floor at RE Plus, and I'm excited about like how this industry is changing. I mean, there would be some pain, definitely, and but with the right innovation, right product, and right pitch, uh, I think we can thrive here.
Yeah, I agree. Thank you, Sanjay. And I definitely would like to just pose this question to any contractor that's listening. If you had to choose, are you building a business to flip installs, doing transactions, or are you serving energy customers for life? And I am excited to be able to see that the market is shifting more toward energy service for life.
Right.
And that is where our market is heading. That's where the narrative is going to be driving, and that's where Solar Insure here is to help contractors be able to service their homeowners for the lifetime of the system of 30 years,
Right.
and really to help them. Did you have a comment there?
Yeah, I mean, I love the product that you guys are offering at Solar Insure because one of the thing is, I mean, there is a lot of upfront cost to going solar, right? I mean, panels and batteries and inverters we are talking about. And if there is confidence in the market and to the end customer that these assets are going to be there for next 20, 30 years and they are covered in case something bad happens, that's the way to instill confidence in the customer. And I mean, I just want to commend you guys on offering this product where, I mean, if customers are confident, they would be willing to spend money on the solar and storage. Yeah.
Absolutely, I 100% agree, and that's the way to lead in 2026 and now for 2026 sales for homeowners to be able to say yes today to an install in January 2026 and sign a contract. Um, the contractor and the solar professional need to be confident in the value and lifetimes of savings, the value of ownership with solar and storage, that the confidence that it is one of the best ways for the homeowner to be able to create resilience within their own system, right, in their own home, and to be able to make sure that this is going to be what they're going to have for decades to come, and really to have that protection. So I think 2026 is looking like it will be a market of two different camps. Ones who react to the changes, and ones who plan and lead within their regions. And Solar Insure is here to help contractors to be able to do that. And if you want to learn more, reach out to us. And if you are either reacting to market change or rewriting the playbook, and you can't wait for clarity, or really following what others do, let's build the future of solar and storage together, and really make it something that's resilient and something that consumers can trust and bring value to our industry. I want to thank you, Sanjay, for coming, and all you for watching today, and looking forward to the next Solar Slopes.
Yeah, thank you. Yeah, it was nice to be here and thank you, Dean. Yeah.
All right.